Anywho, um, let's just get into this. So in this video, I'll be going through maybe a couple of assets. Depends how long it takes for me to actually do a top-down analysis on one asset. So hopefully I won't be that long. I'm currently at work, so I shouldn't be doing this, but I'm gonna do it anyway because it's for you guys. So let's get into this. So when I do top-down analysis, I want to go to the highest chart, and not maybe not the highest chart, but I start normally at the 3 monthly chart. Some other pairs, like I've discovered that if I'm going to do a top-down analysis for forex pairs and crypto, then I'm going to have to start on the 3 monthly. And if I'm going to be taking trades or doing a top-down analysis on indices, then I will most likely um, start on the monthly chart. It's just a matter of there's a lot more candles um, on forex compared to like indices, like even on the crypto. Honestly, I can't mark this order block out, but I had a buy limit right here on this pair, and I had a limit order like on this candle, but I should have just placed it at the start of this. Um, but as you can see, price they pull into this area, and then price bought off, and I. But it's okay. I might as well just take away this order because I could have been in profit by now, and yeah, I can just close the trade for now. And yeah, I honestly don't know which pair I should start with. Because like but the same thing here on this pair. I'll most likely be doing probably taking live trades after this, but only on these two pairs because these are the only two pairs that I know that move on the that move. This broker, which is Pipperstone, and I think you got Bitstamp, also Bitcoin, and as you can see, we've like starting to make our way higher again from this area of imbalance. So I will definitely have to do something because those other two trades I was gonna like. Hopefully they were gonna play out today, but I can see price did not tap in, and I've got to sell also here in gold. Um, so I honestly, since like this is a change in the state of delivery, like I'm pretty sure that we're probably gonna have a retracement coming in this week um, for gold, and then we can go lower. But I honestly have to make sure that I am taking trades that are high quality, and that meets my criteria. So yeah, we want to do a top-down analysis. We normally start on the 3 monthly chart if we are trading currency pairs or forex. So let's dive in here. What's this? Honestly, I don't want to be removing any of my stuff because um, maybe I should have just moved my buy limit there. But it's okay. If price doesn't tap, then I know at least I was right overall. Is except placing my pending order. But let's just um, get a different. Let's just get a different broker. Let's do Pepperstone. Okay, so we start on the 3 monthly chart. So I'm gonna focus over here. As we can see, we are literally all-time highs. Recent structure that was broken on the monthly chart was this area right here. These relatively equal highs. These served as a magnet for price to pull to or go towards. And right now we are pushing into this order block right here on the monthly chart, 3 monthly chart. So I can actually just put something. I can just um, okay. Let me not do anything. Let me just put a okay. I'm not gonna put anything there. But as you can see, for now we're just looking at structure, basic structure. So we got this higher high, higher low, this higher high, this higher low. So if we take our Fibonacci, because it's swing high and this is swing low, and as you can see, we have pulled into our discount level, and we've also rejected this breaker right here. So you want to look for structure on the 3 monthly chart. Just mark structure. It will be probably more apparent on the monthly chart. If that is what you prefer, then you can do that. So you can have a higher high, higher low, higher high, higher low, higher high, higher low. So okay, I won't count this as a high because we didn't actually break above this. It's just relatively equal highs. So it's my higher high, higher low, higher high. And on 3 monthly charts, this will be my trading range. And this was the breaker that price rejected or is busy rejecting from. And we've also got this monthly order block down here that price could definitely also make use because we've got this liquidity here. We've got liquidity over here as well. But we have to see what price is doing at the lower time frame at this breaker. So let me just so this is my monthly 1 monthly order block. So now we go to the weekly and we can see that we have this uptrend right here, continuing, but on a high time frame, this looks like one big move followed by a retracement, like one big move. Let me just make this smaller. We had one big expansion, retracement, expansion, retracement, and we're gonna have price expand once again. So high time frame tells us that we are bullish, And the weekly time frame tells us we are also bullish because we were bearish in this range, but as you can see, we have some closed up candles right here that is going to be on a lower time frame structure that most likely you will see that in this range we will have a better market structure where we can compare when price is actually changing or reversing, um, just off market structure alone. So if we go here, as you can see, we have our expansion, our retracement into this breaker block, and price created this downtrend, creating lower lows and lower highs on the daily time frame. And we pulled into this area, we had a change in the state of delivery right here. So you could have entered right here and targeted this high right here, or you could have entered off this inverse imbalance right here and set your stop loss below this low or below this breaker block, up to you. But if you wanted to actually wait for a market structure shift, then you would have probably had to get in right here. This would have been the market structure shift on the daily time frame, and you would have had to get in right here, um, or in right here, and to be safe, place your stop loss below this. So if you got in here or in here, you would have to put your stop loss below this area because these are mitigated um, points of interest. So, but if you are like me, you would definitely go to a lower time frame to where you can actually see like what's happening right here, because this gives me a bad risk reward ratio. But if I can find something with 4 hour that can give me a signal that price is going to reverse, then that would help me a lot more. So as you can see, excuse me, we've got this 4 hour trend right here creating lower low supply is in control until we eventually break above this area, and then you would take your Fibonacci, place it over this area, and you could have entered of this breaker right here, you could have entered of this breaker right here. Doesn't really matter because they are literally almost in the same place. It's a matter of just which one you are going to use. If I was you, I would have probably used the most recent one because then it makes more sense that this was going to be an area that was going to act as resistance. But this is also fine because this is actually more valid because you have a breaker structure which was created from this impulsive move. So this made this a valid order block. But price came in, and if go to a lower time frame such as the 1 hour, you'll see that we had a market structure shift here, we had a 4 hour market structure shift here, and then we had a daily market structure that's way up there. So it's up to you whether you are going to use breaker blocks, but it seems like this pair loves using breaker blocks, and you need to get familiar with like the type of asset you're trading so that you can take advantage of what's being shown in front of you. So as you can see, we had this 1 hour market structure shift followed by pullback, and this pullback was into another breaker block, which is on the left there. And I would have used this order block, but as you can see, price didn't actually pull all the way down there. So I'm going to be assuming that USDJPY loves using breaker blocks. So I would just be safe, place my stop loss below this low. And since this was a 1 hour chart and the daily, I would have probably targeted this 4 hour high, because this is still structure for our structure. If you go to the 4 hour, this is a 4 hour lower high. So I would have targeted this high right here, after the market structure shift. And if you want to actually go lower, to a lower time frame, and you don't want to enter just off a market structure shift on the 1 hour, and price giving you this point of interest, that you can use to enter off. If you're not happy, or you feel like you need more evidence, then you can perhaps maybe pop down to a lower time frame. So this is price creating the higher high, and this is price pulling back into this breaker block right here. And if you wanted to get in here, then you would have probably had to wait for price to close above this lower high. So if you go to the 5 minute or the 3 minute, this will be downtrend structure all the way to this 1 hour breaker block. And once we created a higher high, you can take your Fibonacci, you can place it over the range, and there's something wrong with my fibs. There we go. Over my range, you can see we pulled into our discount level, and this time we are entering off this 15-minute fair value gap. And I normally enter at 50%, and stop loss below the low, and you could target this high right here on the left, or you could target the daily. Let's just go to the daily quickly. Yeah, so the daily pullback is actually all the way up here. So that, look at that. That's a 1 is to almost 26. If you are able to like get good at entries, these type of entries, but you're gonna have to swing trade it though. So I try to mix up my trading in terms of when I trade like Forex, I would swing trade Forex, and if I'm trading indices, I would price action trade, or I would just do simple scalping on that, or on metals. I would also scalp and price action trade. But I hardly swing trade those type of assets. So